Good afternoon and welcome to the ELIXIRR International PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it received in the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Stephen Newton, CEO. Good afternoon to you, sir.
Thank you, Alexander. Good afternoon to everyone, and thanks for taking the time to attend and listen to our presentation about our business. And as Alexander says, if there are any questions, please type them in, and if we get the chance, we'll have a look at them and see if we can answer them either on the fly or at the end. I'm going to introduce myself in a minute, but I thought it might be a good idea for Graham to introduce himself first, and Caroline then next. And then what I will do is I will introduce myself and follow on with the introductory slides about the company.
Thanks, Steve. Graham Busby here, co-founder with Steve and CFO. Alongside the obvious financial responsibilities of being CFO, I lead out on our inorganic strategy. Steve and I have known each other more than 15 years now. We worked together at Accenture, and I guess during the latter part of that time, started talking about starting our own business, and that's what we're here to tell you about today. So looking forward to talking to you.
Hi everyone, Caroline Pitt, business manager at ELIXIRR. Joined the firm just over 5 years ago now. Had a very interesting route through the firm. So joined initially in the marketing team, went on to work closely with Stephen and joined the IPO team internally, then the M&A team, and now I continue to work with the leadership team on all strategic areas such as investor relations, new M&A activity, and anything else we're looking to do in the market.
Thanks, Caroline. Just a little bit about myself. For those of you who didn't catch it in the first few lines I said at the start, I've got a South African accent. I came to London in 1995 for 2 years. It's been a long 2 years. I was with KPMG in South Africa, and I came to the UK with them. KPMG, obviously, audit and consulting firm. And then I did 4 or 5 years with them, resigned around the dot-com bubble to build a startup with 6 other people, which failed miserably, and I learned lots of good lessons. Also spent a lot of my own money trying to do that. And then went to IBM for another 4 to 5 years, give or take, where I was back in the consulting industry in the city, traveling around the globe as well. And then tried another startup, which also failed. And then again, returned to the consulting profession with Accenture, spent another 5 years with Accenture, and then finally decided I would do another startup, which was what you see in front of you, which is ELIXIRR. So I've always had this itch to try and build a business, and in the end decided to build a consulting business, having seen in 3 of the biggest brands, consulting brands in the world, what works, what doesn't work, and why, and what the potential was to build something unique and challenger as we are trying to be as ELIXIRR today. So that's a little bit of my background. Maybe it gives you a sense of who I am. I could just say one other thing just about me as an individual. I stayed in London for 2 reasons, actually, not going back to South Africa. 2 reasons. I use the analogy, once you've played in the Premier League, it's very hard to play in Division 3. And that's my business reason. And then personal reason, I wanted to bring my kids up in a society that saw the world rather than saw looked inwardly at its own country. And I felt the UK was the best place for me to give my children that worldly perspective. So those were the two reasons I've stayed, and I thoroughly enjoyed it here now, and obviously had a good time building this business, and we continue to build it. Let me move on a little bit. There's often a lot of misunderstandings about what is consulting and what's the real value of consulting. So for those of you who are aware of some of the jokes about the consulting profession, I thought I'd use an analogy to give you the reason this profession exists and why it's such a big marketplace in the B2B space. One of my previous partners once said to me, he was actually a previous client, and we were discussing how he got value from us as a consulting firm. And he said, he used this analogy for me. He said, Steve, it's a bit like I could be the best surgeon in the world, but if I'm involved in a car accident, the paramedics in the ambulance that arrive are far better at dealing with the circumstance than I could ever be as the best surgeon in the world. And the reason is because you're engrossed in the moment. you're probably, you're obviously emotional if it's an accident, and often there's a lot of business decisions that are fairly emotional. There's critical events going on. And obviously paramedics deal with these situations repeatedly and often 3 or 4 times a day. So the advantage of consultants is you're one step removed from the problem. You've dealt with it many times before, and you can bring a level of understanding of the situation that delivers the right behaviors at the right times and is most appropriate for the circumstances. So I always thought that's a nice way to give you a sense of what is ELIXIRR trying to do. It's trying to be that for business, be that independent voice of reason when everything is either going extremely well and you might be missing opportunities, or things are going extremely bad in business and you're not sure what's the right path to take. So that hopefully that gives you a good sense of what consulting is about and how we view it, and the possibility for us to make a difference. I think a lot of consultants get challenged because they fail to take this position of independent advisor and clarity of thinking in a crisis and guidance in a crisis, etc. And this is why I think there's such a great opportunity. I think a lot of the consulting firms of today, or the historic ones, have become almost encumbered by their success. Their history is part of their problem. And what we're finding is that with a fresh approach and an adherence and a commitment to the principle of making a difference and being a challenger with an entrepreneurial mindset, we are finding a lot of traction in the market. So hopefully that gives you a good sense of what we believe to be the value of the consulting business. So what is the economic opportunity? I thought the best way to do this was to give you a sense of the scale of this marketplace. It is a very, very big marketplace worldwide. You can see on the right-hand side there, dominated by 10 of the largest consulting firms in the world. If you are familiar with this world, those names will be almost household names to you. But if you're not, these are very, very big names in the consulting profession. And you can see that the top 6 firms are over 10 billion in revenue. And the market size is about $234 billion of revenue. And it's on the left-hand side, you can see how that consulting marketplace is growing over time. So since 2011, and we were founded in 2009, but you can see since 2011, it's been an 8% market CAGR. In that same period, ELIXIRR has been growing at about a 30% market CAGR. A few other points to note here is that, if you look at our 30% growth into this marketplace since 2009, it's really taking market share from the top 10 firms. Caroline will talk to you a little bit later about how our competition see us vis-a-vis how our clients see us vis-a-vis our competition. But you largely that 30% is actually taking market share off the top 10 names you see on this list. There is a new opportunity that the IPO has presented us, and Graham will talk to you about that in a little bit more detail, and that is the other firms line of 97.5 billion, or 42% of the market that you see there. That's a marketplace where we can actually gain market share through acquisition. And we've done 4 acquisitions since our IPO. And I think you'll find Graham's discussion with you around how we're going about that a very interesting and exciting opportunity to leverage our growth. So that 30% of growth is largely organic. And of course, since IPO, we can now add the inorganic opportunity to this. The other point I'd just like to make on this chart before I move to the next is that there's only 3 publicly listed companies here. And if we grow at our 30% CAGR that you see here, which is organic, it'll take us 15 to 16 years to become a top 10 consulting firm in the world in revenue terms. And why I present it to you in that way is to show you the longevity of opportunity if we continue to make a difference and gain market share. We can continually, there's a lot of runway for us to grow into before we start capping out and not having enough market to be able to make a difference. So we believe that there is a very, very big opportunity. Our objective, you see McKinsey & Company there, 5th on the list. They are the biggest and probably most highly regarded strategy and change consulting firm out there. Our plan, as you will see later, is to take them on and do what Accenture has done. You see Accenture there to IBM. And that leads very nicely into my next chart, which is a comparison of ourselves to Accenture since the IPO. So clearly Accenture IPO'd many years ago now, back in 1992 or something around there, maybe even 91, 93, somewhere in that range. And obviously we IPO'd in July of 2020. But what we've done is we've baselined the IPO date as a date, and you can see Accenture's growth, which is the purple line, over the first 12 months of their listing was essentially flat. They were slightly up, 2.2% up over the period, whereas ELIXIRR over the same first 12-month period, we were up, as you can see there, over 150%, actually around 160% up. So we think we've outperformed them in the first year. And if you now look at what that looks like relative to this ambition of ours to overtake McKinsey and how Accenture did this to IBM, the first point to note on this chart is that the little yellow box you see in the left hand by the 2001 year is the first year. It's basically the chart I showed you on the previous page, which is that same time period. So what you can see what's happened since. Clearly, Accenture was far less than IBM in market capitalization, and no one thought they would ever take on IBM. What they have done is basically eaten IBM's lunch, and I believe Accenture's success story is one of the most underrated business successes over the last, well, certainly in my time in business. It is a services success story second to none, and they have truly given their shareholders an unbelievable return if the shareholders chose to stick with them during the period. Now, of course, this is what we plan to do for against McKinsey. You might say that's very bold ambitions, but you know, it certainly was Accenture's ambition, and if they didn't have it, they would not have achieved it. So we have the very same ambition, and we'll show you how we are going about doing and achieving that target in a few minutes' time. But I think this gives you a good sense of the scale of the runway, the size of the opportunity, the massive market, the growing market, and our opportunity to grow into that space, and therefore obviously deliver fantastic shareholder returns to all of those who wish to take equity participation in the journey. One other point is, it's just a little point here, Accenture took almost till 2007 from its listing in 2001 to achieve its 150%. We did that in our first 8 months, but clearly we're still actually greater than that now. All markets have taken a haircut since the Ukraine crisis, of course. We're proud to say we haven't taken as much of a beating as everyone else, but no fundamentals in our business have changed. Let me just put it that way. So we feel very, very fairly priced at this point. So if you look at our ambition, so let's put an economic number on our ambition. Let's say in the next 3 to 5 years, I would like to be a services unicorn. What does a services unicorn mean? It means being a $1 billion market cap company. As of today, we were 291 million market cap. If we grow at 58% compound growth rate, which is actually the CAGR since we IPO'd, and the reason our CAGR since IPO is greater than the pre-IPO CAGR of around 30% is obviously we've added now the inorganic opportunity into our mix, which if we continue that for the next 3 years, you know, assuming our revenue, EBITDA remain the same and our multiplier remains the same, we should achieve our ambition of being a services unicorn in 3 years. If we grow at 30% compound annual growth rate, which is the growth rate we've had organically since pre-IPO, then we should do that in 5 years. If we take a very conservative view and assume that we're not going to get the same kind of growth in the recession, so let's say it's 25%, we will do that in 6 years. We still believe at a very conservative end, a 3 times opportunity on a pound invested today in 6 years is a pretty good opportunity. I think it's an even better opportunity, a 3 times return in 3 years. I still think that's very achievable, and you will see the reasons why we think that to be the case in the next few slides. In the rest of this presentation, let's say. How have we done? We've given you a very bold objective. We've given you a very or at least a view of the size of the marketplace, and you might say, well, okay, how have you done relatively historically, and then perhaps the next question is, what's your plans going forward and how do those things look? So here's a view of how we've done historically. I said we launched in 2009. Graham and I sitting in my back garden around a table, and then deciding to do this. And you can see our revenue growth there, with one down year in our entire 12 years of existence now. So, and that one down year was a very, very important year for us because we actually learned quite a few things. It was at a point in which we were getting to probably 5 or 6 big clients, and we had a little bit too much dependency on 1 or 2 of those. And when 1 or 2 of those were no longer there, we felt the pain of that. And that you can see in 2016. That made us even more determined to diversify our business across multiple sort of dimensions, let's say. So we've diversified across industry, across geography, and also across capability. And I'll talk to you about that a little bit later. But that was a very important lesson in our history. But from then, you can see how we've accelerated. And what's nice is since our listing in July of 2020, you can see we've added in the gold there or yellow, we've added inorganic growth as an accelerator to our growth opportunities since IPO. The other thing I'd point out about our IPO, we see ourselves as a challenger. We believe we have the opportunity to steal market share from the big players because they are so encumbered by their history and are unable to behave and act in ways that clients want to see from entrepreneurial consulting leaders. And I think there's a very, very good example sitting on this page of us doing that. And that is the listing in July of 2020. Those of you who recall, we went into lockdown around March, April time. And literally we decided to use that time to get our listing done. And we were probably one of the few listings in the year. In fact, we were the first since lockdown. And it gives you an example of the sorts of the mindset we have. We know the opportunities there. We thought we'd grab the opportunity when the rest of the market was hesitant. We thought it was time to make the move, and I think it's paid back very well for us, and we will continue to do that. But it does give you a sense of the posture we have towards the posture we have towards our clients, and why we make a difference to our clients' opportunities. Here's a slide that gives you a sense of our nimbleness, but also the opportunity. We were founded just around the back end of the Great Recession, and that was a very much of a bear market. And we were founded with a set of skills that Graham and I had initially, and then we hired a bunch of people around us. Efficiency, strategic sourcing, supply chain, procurement. We've added procurement in. That's what you see on the right. It's a cost reduction and operational efficiency play. We've actually made an acquisition, which Graham will tell you a little bit more about, Return, which positions us very nicely for an environment that is a recessionary environment where businesses need to save money. But equally, we've done very well on the revenue and growth side of the business. We're very big in innovation. We've done a lot of M&A advisory. We do it ourselves. And one thing we found exceptionally profitable for our business during the pandemic actually was the digital transformation story. And we still have quite a lot of business in that space, to be honest. But it is obviously something that is very growth minded as opposed to cost reduction. It can be cost reduction, but it's more often seen in the growth mindset, and clearly customer experience. And we've made our acquisitions to try and make sure we have both sides of these markets covered. So we feel like we're getting more and more resilient to the trends in the marketplace. So our business is becoming far more resilient. And I'll go into this a little bit more detail when I talk about our strategy on a page. Why are we better then? So here's this is a gift my son gave me when we did the IPO. On the morning we woke up to being listed, I was in a hotel in London, and my son was actually doing an internship with a firm, and he came and knocked on my door, and he gave me this present as a gift to me for the achievement of IPOing ELIXIRR. But you can see our old logo there, established 2009. And I thought I'd use this watch just to give you a little bit of a history around the connection of my son to the company and how passionate we are about this business. But but also the watch has got another analogy and another meaning. If the consulting profession is criticized for anything, it's criticized for things like this. People joke, they'll say, when you hire a consultant, they'll take your watch from you to tell you the time, right? And this is a common sort of criticism laid at the consulting industry, that middle managers will bring in consultants merely to say something that the senior management will only take from a consultant as opposed to from a line management person. And there is some merit in this. I mean, behind every joke, there's always a little bit of truth. And we're not afraid of facing into these criticisms. And that's actually what makes us the challenger consultancy we want to be. If that is the perception of our industry in a lot of ways, we face into these things and deliberately try and address them with things like bringing entrepreneurs to the table, people who, and part of the main value of doing the IPO actually is to allow all of our participants as partners to become business owners in the true sense and equity participants, and therefore to be able to stand alongside any investors that are actually financial investors and understand the risks and rewards of that position, and therefore make the right decisions to maximize that financial opportunity. So this is one of the examples of how we try and overcome these limitations. But what I wanted to show you here was a video of our posture to the marketplace, and we're finding that a lot of our clients are really resonating with this message.
It doesn't matter that we've never met. I don't even need to know what you do. I'll take a solution I've used 1,000 times and change the name to make it seem like it was a framework curated to your needs. I'll take ideas you've already had and make you think I came up with them just by putting them in a 200-slide presentation with figures I pulled right out of my extensive pool of data. And then I'll get you to put me on a retainer so I can keep making you think I've got the perfect solution. So, are you ready?
All right, sir. Hold on.
Perfect. Put it on my clients tab.
Which one?
Whichever one comes up first.
Okay, so what you see there is our latest, well, not one of, it is actually our latest ad campaign, but there's a lot of important messages in there. Things like, we don't copy and paste things off the shelf. We try and bespoke things for our clients. We do not take this kind of posture that is represented here, but we also show our clients we actually understand the weaknesses of our industry, and we face directly into them and wish to address them. So this we're finding is actually resonating really well with our clients, and they really do like this. And in particular in the US, the US is very, very open to a challenger and entrepreneurial brand. And this is, we're seeing this manifest itself very strongly in our US marketplace. What I'd like to do now is just to give you a little bit more detail on our sort of strategy on a page, if you like, and a little bit, this should give you a little bit of an understanding as to how we are diversifying and making our business more resilient. So what you can see on the left here is, in the gold, you'll see all of the core capabilities that we've literally grown with the last 12 years. If you know that we built these things up over the last 12 years, and you can see the geographies that we operate in there, and you can see some of the acquisitions we've made into those different areas. So we've got cost reduction, strategy, innovation, digital, and all the industries we do that in there. So multi-industry, multi-capability, multi-geography, all brings diversification in our existing business financial year 2022. What have we been doing in 2022? As you will have noticed, as we mentioned, Graham will go into a bit more detail, but we have obviously bought ELIXIRR in the early part of this year, the middle of March, I think we finalized on that deal. And that's been a very big impact in the business. I've hired 2 partners into an area, risk and compliance, which is very counter-cyclical to a downward industry model, a downward economic model, if you like. Obviously, ESG is a very big topic in this space, and we've done a team hire of a company called Kit Consulting, led by M, who is now joined us as a partner, and we're diversifying into this space. Clearly, we do M&A for ourselves, and we're turning that capability on doing M&A for our clients, which is very strategic for them and obviously positions us very well. And more recently, I've just hired a new partner to get us into the pharmaceutical industry. So you can see the kind of sort of diversification we're doing across capability, industry, geography, and then there's future potentials. And all of these future potentials, whether it's cyber or Lean Six Sigma or cloud or whatever it is, we'll either we'll either hire, you can see that's hire to fill on these capabilities, or we'll actually do an acquisition. And you'll see the 4 pillars of our strategy there of growing this business: stretch, promote, hire, and acquire. The 3 on the left are all organic opportunities, and the one on the right is really the inorganic. I'll leave Graham to talk to you a little bit more detail about that, because it tees up the whole acquisition. And I see that Sam has asked a question about any further acquisitions. Graham will obviously address some of those for you, Sam, when we get to that section of the presentation. So we will also, you made a point here. Let me address this point about the US. How important is the US growth? The US is a very, very strategic part of our agenda right now. Just very quickly, just to explain that, the American market is twice the size of any other consulting market worldwide. The second biggest consulting market, you guessed it, is Europe. But America is twice the size of the European market. And then you get into Australia and the Asian markets. And, you know, of course, if we want to be a global player, you have to be in the States. So very clearly, we set our sights on growing into the US. And the US is now about 50% of our turnover. So in about 2 or 3 years, with the acquisition of iLab, we have the US is at about 50% of our turnover. And going into next year, 60 so percent we think will be in the US. So it's a very important part of our growth strategy. And I've got a fantastic US leader out there, and our firm is growing very nicely out there. So hopefully that gives you, Sam, a little bit of an answer to your question. And before I go to this, let me just quickly, this is a presentation a video from one of my senior partners who's been working with a client on operational efficiency and cost reduction. And it gives you a little bit of a sense of the broader team skills, but also the type of work we do on our clients. So let's play this video.
When I really started my career, we were in difficult economic times, and really for the first 10 years of my consulting career, I was doing this kind of transformational work. I was doing this type of operating model change work. And I really see that happening again as we look to the next several years. And frankly, ELIXIRR set up perfectly to take that on. A lot of us have that background. We have the experience to really guide executives who maybe haven't been through this type of environment and guide them safely through it. One of the main reasons that this brand came to us was it's one of the most iconic luxury brands in the world, and their reputation means everything. And they work with suppliers and suppliers of suppliers around the world, and all it would take is one supplier to do something that would, whether it's child labor or pollution or whatever it might be, if one of their suppliers did something like that, it could really tarnish their brand. Now, that was a real challenge because in the past, really the different lines of business and the different brands around the world had a lot of freedom to do whatever they want, contract with whomever they wanted to, and that was good. It kept business moving fast. It kept the standard high in terms of what was really right for each line of business, each local region. So one of the things we had to do is help them put in a framework that was going to provide more assurance around that, managing that supplier risk, but also not so constrictive that it slowed the business down. We wanted to keep speed in the operating model so they could continue to behave in the way that they do and work with the speed that they do, but within a framework that would help manage the risk and protect the brand ultimately. As a federated brand with people around the world being able to kind of behave any way they wanted to in the past, coming up with a centrally run program was culturally very different for them. So one of the things that we had to help them do was figure out how to find the right engagement model with the regions to actually do that. what this brand asks us to do is to come in and really help them set up that engagement model, do some executive level education, help them understand why they need to do things differently, and then help create new patterns of behavior across the executive team to actually operate in a new way. What that led to was us putting together a change playbook, which we developed and rolled out to the regions for this particular program. But it's also something that I'm presenting to the group CFO next week to actually see how can we use that playbook not just on this program, not just in finance, but across the business overall. One of the things that's really important about this work is this kind of need to transform and drive efficiency across the business and really make it cost effective. We're seeing it really in every sector, really in every geography. So this is, for me, just an example of the type of work that we're going to be doing in 2023 and 2024. What business leaders realize at this point is you can only get so much out of just cost cutting. At some point, you have to really make structural changes. And that's exactly why transformation work that really goes to the heart, the core of how you operate, the core of how you're organized, is going to be super relevant in the next few years. This is not a choice. Companies are going to have to transform their businesses to be able to operate in a more difficult economic environment.
Okay, so that's Brandon talking a little bit about a client he's working with and the opportunity for us to work with clients transforming. What I think I'll do now is hand over to Caroline, who will give you a bit of an understanding about why we think we're better, and also talk a little bit about our branding and market positioning.
Thanks, Steve. So obviously, to be the best consulting firm in the world, that's our overarching ambition. We need to make sure that the market believe that to be true, and our clients at the moment believe that to be true. So before our IPO, we conducted an external survey to ask them exactly what they thought of us, exactly what they thought of our work, and even who they compared us against in the market. So the first question was, who do you compare us against in our competitors? This was an open question, but the overwhelming response was McKinsey, Bain, Boston, the MBBs of the consulting world. So we outperformed our competition in almost every area of the survey. So this covered the approach that we take to work. It covered the quality of our teams, both junior and senior level teams, and the value that we added to the client at the end of the project. We did come on par or just below our competitors in a few areas, just at the bottom of the chart on the left there. So marketing, international capabilities, technical capabilities, and company reputation. Now, this was a few years ago, so it was pre our IPO, and we've actually worked to address all of these areas since the IPO, and the IPO actually fed into improving many of these just naturally as well. So obviously, we've invested further in acquisitions, which has contributed hugely to our technical capabilities improving over time. So all of the two digital businesses and ILAP in March of this year. We've obviously expanded internationally as well, largely in the US with ILAP, but also geographically, we've accelerated in South Africa and across Europe as well in recent years. And marketing as well, just obviously naturally, we've always invested in marketing, and I'm going to touch on that more in a couple of slides' time, but naturally our profile grew in the market upon our IPO. So those areas we've heavily improved on in the last couple of years since the survey was taken. And obviously, we want to be absolutely top for quality. That's why our clients come to us. And actually make sure that they see the value in our consulting advice, rather than being seen as some of the themes that Stephen touched on earlier, which are typically the critique of the consulting industry. And just on the right-hand side as well, the way that we hold ourselves to the highest quality bar, we also do so with our acquisitions. So as we're going through the typical due diligence process with acquisitions, a huge part of this is obviously commercial and how their clients see them. So each of the acquisitions to date was put under the same level of client scrutiny or client survey, and all of them came out, the same quality bar as us, all outperforming the competition, with Coast. And obviously we looked at digital companies and agencies and compared them like for like with different firms, so not necessarily typically in the consulting firms, but each of them outperformed their competition, which is the key thing here. And Graham will touch on that when he talks about some of the people we're targeting further down in new targets as well. So just going on to the next slide. So another key differentiator for us in the market is the fact that, you know, our team are all owners of the firm to different degrees. So on the right-hand pie chart there, you can see the percentage of that, and that covers obviously from the most junior grades all the way through to our partner team, to the directors. And that's really, really important for us. It means that all of our team are committed for the long term, which our options plan really feeds into. People's options vested between 4 and 5 years. So that naturally increases the long-term commitment that they have. And also this is based on performance. So it's integral that our team stay committed to that high bar of performance that we've always set as a firm. And this can become obviously more and more challenging as companies grow. So this options plan is a huge incentive for people to keep performing, to keep delivering for clients. The bottom left-hand box there just highlights our ESPP scheme. So this is a market-leading equity scheme, which we're going to show you a video in a second of one of our analysts actually talking through in a little bit more detail. This was introduced in FY21, and we've already seen an increased uptake for 2022 of this scheme. So we're already starting to see how people are more and more engaged with the company. They can see the benefits of, you know, themselves sacrificing some of their own salary to get benefits back in shares that we actually match as a firm, but also, you know, as the market changes and as the share price increases, you know, they're starting to see the benefits of that as well. And that's very much our mentality as a firm. We want to be a firm of entrepreneurs, not a firm of employees. We want our team to feel the risk and the reward side of an entrepreneur. And again, that feeds into our culture. This is a huge differentiator for us in the consulting market. So now I'm just going to touch on this video with Alice, one of our analysts, talking through particularly the ESPP scheme and actually what that means for each of our employees.
At ELIXIRR, we are a firm of entrepreneurs, but what does that actually mean? Well, we take calculated risks for the things that we truly believe in, and that is exactly what we're here to do. Each of our employees across the brand have the opportunity to sacrifice a percentage of their salary for shares in the company. And so this means, just like sort of true entrepreneurs, we take financial risk in order to reap the reward. This also means that we are owners of the business, so we do benefit directly from the hard work that we put in. So I think what's really unique about our equity scheme at ELIXIRR is that, unlike other businesses whereby executives or partners are the only people that can benefit from this kind of scheme, is that anyone from an analyst all the way to principal have the opportunity to sacrifice an element of their salary in exchange for shares. So under the employee share purchase plan, our shares are matched 100% by the company. So this means that with every share I purchase, the company also purchases one share. So essentially, I'm doubling my investment. You might find this daunting, particularly if it's your first job or if you've come from a non-financial background like myself. It took me quite a long time to get my head around it. But in simple terms, in January 2022, I entered the scheme. And then by the 31st of December 2022, I've bought 100 shares in ELIXIRR. This all happens through a platform. We don't actually have to do anything, so we just have to sit back and watch our investment. In January 2023, I'll be given 100 shares by the firm as a matching grant. These 100 shares will then vest by 20% per year over the next 5 years, given that I stay at ELIXIRR. And once they do vest, I might want to sell, in which case I can. So this essentially means that in January 2024, you get given 20 shares, same again in 2025, 2026, and so on until 2028. So if we take a real life example, that means that people who enrolled in 2021 have a 21% return on investment. And it really is that simple. You can also opt out at any point, so you aren't locked in for a certain number of years. So another thing that is great about ELIXIRR is that we are given options. These options are completely free and they're gifted to us when we pass probation or if we're promoted. So options are essentially the right, not the obligation, to buy shares on the vesting day at a fixed price. That price being the exercise price on the day of the grant. So what does that actually mean? So for example, if I was to be given options today, they would be at the market price today. So if the market price were to go up in the future, I would still be able to buy those shares at the price today. So these options vest over 4 years and you're eligible depending on your end of year performance review. So that's something we do on top of our quarterly promotion cycle and also feedback culture, but that's for another video.
So So yeah, as Alice touched on there, the breakdown of the scheme, they're particularly, they're really generous in the market, but they do instill that performance culture. And we do have a very high bar for people to particularly receive the options that they can achieve year on year in the firm. And for me personally, I joined pre our IPO. We've always had the same culture in terms of wanting the entrepreneurial type of person that really is accountable for what they do in the firm. But the IPO just basically gave us the tools to do this even more and instill it across the firm, which is so crucial, again, as we grow and as we bring in acquisitions. And these schemes, they're instilled across the acquisitions as well, so that everyone, is aligned to the same goals across companies, right the way through the group. And now I'm just going to touch on something that Stephen mentioned earlier when we looked at the consulting campaign, which we introduced in September of this year. We launched in September of this year. As we position ourselves as the best consulting firm in the market with our clients and, against our competitors, we really have to have the best brand as well. And everything that we do in terms of our brand identity and any of our marketing is very disruptive. It's very challenger. It stems right the way through our messaging. So, from basically a Times Square takeover that you can see on the left-hand side there, right the way through to the kind of campaigns that you saw earlier on. We really want to call out our industry. We really want to make ourselves known as a challenger brand, like you might have heard of the challenger banks. Our industry has been dominated by the big players for so long, and it's really time for people to look elsewhere and to take a chance on a smaller boutique company where they can get the better quality, better experience overall. And we've always invested in our brand since day dot. But as I said, the IPO really accelerated the profile growth that we've seen. And in the last few years, we've really started to see our marketing as a real revenue stream. So in 2022, we've had over £1 million worth of revenue through. And it's not just about the revenue, it's about the type of brands that are coming to us as well that you can see on the right-hand side there. We're getting some of the biggest brands come through directly through to our website from our brand, from our marketing, which is really, really great to see. That alongside our networks, our incredibly strong networks, is a really, really powerful tool and will only help to accelerate our growth overall in the market to the ambitions that Stephen touched on earlier on. So I'm just going to pass over to Graham now to touch on some of our recent financial performance.
Perfect. Thank you, Caroline. So just to give you an overview of where we stand today, from a P&L point of view, we've mentioned we've been growing 30% year-on-year CAGR between 2011 and 2021. Most of that has been organic, but also supported more recently by 3 successful acquisitions in that period. And then we've had ILAP in 2022, which you'll see in this year's results. Our group revenues are well diversified. We've learned our lessons, to Steve's point earlier, when we weren't so diversified in our early years, and we've spent a lot of time and effort making sure that geographically and by capability we have a very healthy client spread. And we've got a strong track record of healthy profitability with a group EBITDA margin of 31% for H1 22, you can see there. And we achieved that through strong rate card, great client work, and a fastidious control of utilization and costs. So we managed that very closely. From a cash point of view, a very healthy position, 14.3 million FY21 operating cash flow. And we've got very strong conversion of EBITDA less tax to operating cash. And group net cash at the interims half year was £11.1 million. That's after financing ILAP, the initial consideration without dilution. So rather than printing new shares, we bought shares and gave them, we gave them cash to buy shares from the EBT. And I think a very well run consulting business should never have a cash problem, and ours is run very well indeed. From a balance sheet point of view, again, very strong. We've got a robust and healthy balance sheet. At 30th of June, we had net assets of £90 million with no debt, aside from the IFRS 16 office lease capitalisation. And from a working capital management point of view, we're efficient at 45 days debtor collection as at end of last year. So no bad debt either. We've got a blue chip client base who pay their bills, which is always very helpful. And from an outlook point of view, you probably have seen this, but if not, we've reaffirmed to the market at our interims that we will be within the guidance range of 70 to 75 million pounds revenue, and we were happy to upgrade our EBITDA forecast at the interims to be at least 20 million, which was above the previous market expectation. In terms of go forward and our growth strategy, I just wanted to expand on the 4 pillars that Steve touched on. Anyone that says growing a consulting business is hard, perhaps don't understand that there's actually only 4 ways that you can do it. Hence, we have four pillars here. So 3 of them organic on the left and then inorganic on the right. If I take the inorganic first, so stretching our existing partners, essentially just meaning getting more revenue out of your partner per person. And if you look back at our previous presentations or read the research notes, you'll see that we've been very successful in doing that over the past 4 years in getting our partner team to sell more, thinking bigger with their clients, doing longer term work. And we've actually more than doubled the revenue that each partner brings in per person over those 4 years. So it was around 1.5 million in 2018. And if you take the H1 numbers annualized, we're at about 3.1 million pounds per partner. Promoting partners from within, we've always since day one embraced growing our own timber since the day that we founded. In fact, relatively recently, we had our first partner promote who has gone all the way through the firm from graduates, which was a very proud moment for us. And that is now we have enough people who've been here for long enough that will be happening more and more. And the great thing is these people are culturally integrated within our business, and with the right incentivization, they will help us succeed going forward. We have a team of highly performing principals who will be our leaders of the future with the options packages and the incentives that you heard from Caroline in place. We're in a really good position. The third pillar is hiring new partners. Steve mentioned some of the partner investments we've made previous years and in particular this year. We will continue to do that. If we can bring in more client networks and consulting industry expertise, then that's a key part of our growth strategy, because we can then, look to work with their relationships and their clients and hopefully make them our clients when they come over to us. And then the fourth pillar, the inorganic piece of the pie, is buying new businesses. And this is the area that I drive. So I will give you some more detail of that in the following couple of pages. So what this shows here, just to give a bit of context, I've had a dedicated team since the IPO working with me on our internal M&A, and you can see some of the pipeline stats on the left there. So to give you an idea, there are 380 companies that I've personally spoken to since IPO. We've closed 4 deals in total and got a really strong pipeline. We could have closed many more, but we're focused on bringing in the right firm, not just any firm. So we quickly discount any opportunity if we see anything we don't like. On the right there, you can see some of the kind of facets, if you like, of what the team and myself are doing in terms of an acquisition strategy. So we are taking what's known as a programmatic approach, which essentially means looking at 1 or 2 deals a year that make up, give or take, 20 to 30% of your market cap. There's been a ton of research recently done by McKinsey, in fact, which looked at hundreds of acquisitive companies and shown that this approach is the most successful for those in the market. So that is the approach that we have taken. It's better than buying a company that is too big, and it's equally better than buying lots and lots of small companies. And it's working well for us and will continue to do so. Boardroom issues, again, we've heard of some of these, but we are targeting being able to buy the best boutique companies that specialize in those main boardroom issues. And we've touched on some like cyber, data, digital, etc. But I think even more powerfully is that as these businesses come into the group, we can start stitching together, for example, data with digital, with supply chain across our brands, and then we can wrap consulting around that to give a truly unique service to our clients around the world. The third is high quality services. To Caroline's point, we have very high bar amongst ELIXIRRs. We have an equal high bar amongst the companies we look at, which makes us very selective. And I could honestly do a deal a month if we didn't care about quality of earnings or quality of client work, but that isn't us. We reject 10 times more progressed opportunities than those that decide not to continue with us, and that's just because they don't reach that bar. Geographically additive, we've spoken about the US. It's a big investment geography for us. That will not change. But going forward, we can use acquisitions to open up new geographies for us. So, we are not around, as a company, we do not invest in a new geography with people and infrastructure and then hope that clients will come to us. We will only go into new geographies either if one of our international clients takes us there, or if a local client has asked us to come there, or through an acquisition. So for us, looking at other geographies, such as into Europe, into South Africa, for example, that's something that we are looking at the moment. And the last point there around aligning deal structures, I think this is critical. We've managed to align our people throughout the firm, as Caroline mentioned, through options in ESPP, and we want to align the owners and founders and leaders who come across into ELIXIRR through the acquisitions, so that they have the same incentives and motivations as the rest of the partner team to help us grow this business going forward. Which is why, if you look at some of the deal shapes, or all of the deal shapes we've done since IPO, it is always a mix of cash, shares, and earning shares. So if they hit their targets over a 3-year period, then they can get that third portion there. And what that does is it incentivizes everyone to cross-sell each other's services into other clients, and it's working really well today. So from a pipeline and strategy point of view, really happy with progress. But to give you an idea of the businesses we have bought in with a few metrics, you can have a look at this slide. So you can see we bought in 4 businesses, one before IPO, which is Den on the left, and then one each year since IPO. Just quickly, what do they do? Den is a design and creative agency. Coast, they do they're a digital marketing agency, but when you combine them with Den, that means we have a full service digital offering with our clients. Return focus on sourcing, supply chain, cost transformation. It was kind of the right-hand side of that slide Steve went through earlier. And coming into a recession, we're already seeing an uptick in demand for these services. And then ELIXIRR are a data and technology consultancy, headquartered in the US, but with a significant data center of excellence in Croatia, which we are now using amongst all of our clients. So as shareholders, I wanted to give an idea of some of the value created, and you can see some of that on this slide. So Den, in terms of multiples, it's not applicable. It's more of a merger into the business in 2017 when we were in LLP. We bought the founder in as a partner who bought his team and brand. But you can see since then, we have turbocharged them since they joined. So, we've increased their revenues 10 times since they joined, and we've created over £8 million of new revenue for the group on digital projects with our clients. Coast came in at a total 4.3 times maximum multiple. And, we've been trading anywhere between 12 and 16 times over the period. So you can see immediately there's a lot of shareholder value there. Likewise, Return, when we brought them into the business, they're excellent at finding value within their clients and our clients. And we've found nearly £4 million of cross-sell revenue with them in just over a year. And ELIXIRR, biggest acquisition to date. We're incredibly excited how quickly we're integrating them into our client set. Data is prevalent in every project that we do. So we've got no doubt that we'll break into new clients and markets working closely together with them going forward. So if you add those up, overall there's more than £15 million of new revenue into the group during this time that neither company would have by themselves. So it shows that it really does work. And then when you add in the revenue they have anyway from their client set and their organic growth to that new revenue, we are adding tens of millions of revenue into the group alongside, the EBITDA and share price uplift that comes with that. So we're going to continue doing this. We're looking for bolder and better companies each time. And before I head back to Steve, I thought it might be good to just give you a view of what do the founders of these businesses coming in think, once they have joined us. So I'll share a little video that I actually use when I talk to other founders of other companies around, the benefits of this. So it is from that perspective, but I think it will give you a really good idea of the people coming in and the businesses.
Hi, I'm Bill, founder of Den Creative.
Hi, I'm David. I'm CEO of Coast Digital.
I'm Chris, founder and CEO of IOLAB.
One of the main reasons that we started talking to ELIXIRR was primarily opportunity. So as a starting business, you're always keen to find bigger and better clients. ELIXIRR had that.
What really made ELIXIRR stand out was the people. We really enjoyed working alongside them. We had a couple of client accounts that we were working in together, so we got to know them a little bit before the transaction.
How do we get in front of large-scale organizations with bigger budgets? That's been the advantage of ELIXIRR. For us, it was access to C-suite, and it was access to try and grow the business, and ELIXIRR on that journey with us, and to work with the team rather than for them. And I think that's fundamentally kind of fits in our ethos.
Everyone's incentivized to cross-sell, so each of the individual businesses are incentivized to sell the other business's work as well, and vice versa. So what that means is, if someone opens a door, has a relationship, they're incentivized to bring you in, because at the end of the day, it's the share price that we're trying to positively impact.
One of the biggest challenges we faced at IOLAP was retaining top talent, and we had to create a way to enable that top level of talent to participate in the growth of IOLAP, and joining forces with ELIXIRR, especially because they had just listed, created a way for us to share that with the next level of leadership.
The idea that partners are invested and partners want to be part of our journey too. Everyone wants to get us in front of clients. Our growth and the partner growth is all super, super open. Everyone can see it. We all know where issues are. We all know where opportunity is.
One of the great parts about having joined ELIXIRR is the great group of partners that we work with. There's 20 plus folks that we can go to gather industry experience. Just working with a big group of like-minded entrepreneurs has been great.
Since we've come across, we've seen real growth over the past, let's say 3-4 years. Revenue growth has been 7-8 times. People team size about 3 to 4 times.
We set targets during the negotiations. We are blowing our numbers out because we're meeting our targets on our own, and ELIXIRR's adding additional work to us, and the rest of the brands are adding work for us. I'd like to see us double, 2.5 to 3 times revenue, which most likely means increase the employee count by about that much as well. And I think we're on pace to do it.
Our growth around new business and our EBITDA target, we smashed it in our first year, and we're doing the same in our second. Coast in 5 years, it's certainly different to where I saw it before we did the acquisition. Our plans are bigger now. The idea of where we're going, the size and scale of where we want to be is much, much bigger.
Don't put a cap on where you aspire to be as a business, because you can grow it as much as you want when you come over here.
For me, my daily job hasn't changed that much. I still run IOLAB just like I did before. The advantage that we have is a much broader breadth of client access. We have a geographical bigger reach. We're working in companies around the globe where we were primarily US focused in the past, and we're working with a big group of great people. If you're considering joining ELIXIRR, I would say have a look, get to know the people a bit, and I think you'll make the right decision. I did.
Over to you, Steve.
So hopefully everybody, you've seen that gives you a little bit of the story of our business. I'll just add one other thing to the acquisition story that I just want to reinforce. The reason we went down this acquisition path and wanted the IPO, one of the reasons was that the best boutique consulting firms, the best entrepreneurial consulting leaders are not sitting in the big top 10 firms I showed you early on. They're actually sitting in the boutique firms. And the reason those boutique firms exist is because they're actually better than the big firms. Because if they weren't, they wouldn't get the work. And so the idea with this whole strategy is that so what is it that all boutique firms struggle with? It's never really capability, and it's never really the entrepreneurial edge to deal with your client in a different way. What it really is access to market. The benefit the top 10 firms have is that they've been around for so long, they have access to just about every client because their reputation and their brand is so pervasive. Whereas the boutique firms always struggle with that access. So what we're trying to do here is build a platform where we all have ownership in the equity of the overarching body, with outside investors participating too, that we can now have a united force to go and share each other's clients with one another and accelerate the growth of the business. And I think what you saw with Graham's presentation there, he mentioned the number about 15 million so far across our acquisitions so far, where the revenue would never have existed with the companies in isolation. It's that ability for us to sell, say, IOLAP into our clients, and for IOLAP to sell Coast into their clients, that is really the accelerating opportunity here, and one we're really excited about. I'm standing on this page because I'm subconsciously sharing the brilliance of our firm with you. You can see we've had many awards since 2014, where we got named Best New Consultancy way back then, to many awards since. And we're very proud of what we've achieved. But perhaps the most important thing of all is the quality of our client base. And you can see there that we work with the world's best brands. I mean, Graham mentioned in his financial update that we don't have any cash collection issues, because literally we work with the world's top brands, and it's something that we're very proud of, and it's something that we're growing all the time. Now, I've answered one or two of your questions along the way. I'll have a quick look here. We just about topped an hour, but maybe there's something I can answer quickly here. I've got Michael who's asking a question. How many clients represent more than 1 million of your revenue, and what visibility do you have on them? Michael, it would be unsurprising to you to know that this is something that gets a hell of a lot of our attention. We call them gold clients, and we have many clients. Actually, I think the last count was 16 or so. I think Graham's nodding to confirm for me there. It's about 16 clients over 1 million. We have 1 or 2 clients sitting at 7 million, and others obviously coming out at around 1 million. But these are obviously clients that why we value these clients a lot is because, if they like us to buy us for one project, and one project could be 150,000, and if they're buying us repeatedly, that shows that we've really made a difference to their business, and that they are valuing our interventions in their business, and that our relationships are really sound and strong. So we spend a lot of time. If we get a new client, it's our first and primary objective to be able to build the relationship so that they see us as that key advisor that they turn to when issues are difficult. So I think we've got quite a few more questions here, but what we will do is, if you all don't mind, is we will have a look at these offline and reply to these in writing, as I think we've now run out of time. But suffice to say, thanks so much for your time, and hopefully you will, like us, see the opportunity. I can guarantee you that I have some of the world's best consultants in my business. They can work anywhere they'd like, in any consultancy they'd like, probably for, in cash terms, 70% more in cash terms. And the reason they don't is because they believe in the equity opportunity here. And what does that mean for you as shareholders? It means that you have some of the best consulting minds and leaders in the industry pursuing the very ambition that you as individual investors would be seeking yourself, to maximize your return on equity. So I can't think of a better way to align interests. And as Caroline said, that goes all the way down to the lady that mans our reception in our London office. She's the front office of our business. Our clients walk through our doors often, and she's incredibly motivated to give them the best Elixirr experience she can. And it all goes to add to the overall value, and she's an equity participant as a result. So thank you for your time, and I hope you can you choose to invest in us. Thanks a lot.
Stephen, Graham, Caroline, thank you very much for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of ELIXIRR International PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.